Good morning, everyone, and welcome to our first TalkCENTS talk show. I'm here having a guest with me, Nick and Bart out of Gold Republic, who are experts basically when it comes to gold. Welcome, Nick. Welcome, Bart.
Thank you.
Thanks, Brian.
So, there is a lot happening basically in the gold market. But before we go and look what the action is basically happening, I would like to have a short understanding what your backgrounds are in the gold market. Bart, please take the floor.
Well, thanks, Ben. Really nice to be here and honored to be the first of your guests. I am specialized in security, but looking at what happened in '09, I thought it was necessary to protect myself from future economic downturns. So what I did was I bought my first silver in 2009, and that is when I just, got obsessed by precious metals and started looking at everything precious metal. And 10 years later, I am the precious metals specialist with GOLDREPUBLIC, a company that was founded 10 years ago. And I've joined, about 6 months ago now, and having a great time.
Fantastic. Nick, could you introduce yourself, please?
Yeah, sure. My name is Nick Finson. I work here at GOLDREPUBLIC for about a year now. And we're basically responsible for all the logistics within GOLDREPUBLIC. So the moving around of the physical bullion around the entire of Europe and sometimes outside of Europe too. Which comes with challenges, but with great opportunities as well. And that's something we specialize in, and especially the last couple of months have been really exciting here at our office. So we're happy to inform you all about it.
Great. So let's continue basically in what is happening in the gold market. Just recently, we saw basically in the last month or 6 weeks, basically a shoot up of the price. The price was around 1,200, if I'm not mistaken, and it's now hovering around this $1,400 per ounce, per 2 ounce.
Yeah.
Could you guys explain basically what is this action all about?
Well, it's always let's start with, it's always part of a sort of speculation model, right? So there is no definitive conclusion why gold goes up or goes down, but we do have some indicators that we've seen before. One of those indicators are central banks. Central banks are both buying record amounts of gold, bought the most since the gold window closed in 1971. And what we also see is that the interest rates are going down again. This Wednesday, it is now the 29th of July, but this Wednesday is the 31st, and then the Fed will, the market says the Fed will cut interest rates by 25 basis points, maybe 50 basis points again. And this all comes within an economic downturn that, if you look at the numbers, then there is a clear, it always takes 2 quarters, but there are clear signs that a recession is coming. And what all that means is, if you couple it with, for instance, the Iran Straits of Hormuz and other geopolitical indicators or incidents, then that bodes good for gold, for precious metals, and it is a sign of weakness for the financial markets when it comes to, let's say, stock markets or bond markets. And that is one explanation why, or it is a host of explanations why the gold price has seen this great rise in the, let's say, the past 2 months from 1275 to about, well, 1420 right now.
All right. So, I mean, if we look traditionally, um, currencies or fiat currencies are not backed by gold. So it is very interesting to hear from you that central banks are now looking into buying gold reserves for themselves. So do you have any idea what made them change their mind, as fiat currencies are not backed? You know, I think in 1974, the US went off the gold standard, and after that, many other countries also went off the gold standard. Do you see now something as a reverse going back towards it, or is it just macroeconomic view that gold is a good investment?
Well, I think a bit of both. When you look at, well, the Nixon shock in 1971, where U.S. Discontinued the convertibility of the dollar into gold. Of course, every other currency was converted into dollars, so we, in effect, had a gold standard. But since 1971, we've been on this experiment of fiat currency. And, well, if we look back in history, this experiment has been done dozens, hundreds of times, and it's always failed. So every currency that gets off of a value-backed system reverts to its intrinsic value of zero. And so when that happens, it is always good to look at assets that represent real value. And precious metals have represented, gold and silver have represented real value, are real money, and have been for the last 5,000 years. So I think that, well, if you look at how central banks, countries are into deficit spending, and what that means for fiat currencies like the euro, like the dollar, it is very possible that both countries are looking to increase their gold reserves. And you can see that, for instance, in Russia, but also in China and different Eastern European countries. They are hoarding gold like they have never done before. And of course, yeah, I think it's always good for investors, large and small, to protect themselves from what might be coming in the form of a new economic downturn.
If I may add to this, I also think that the increase in buying gold by central banks also has something to do with the maybe trying to get rid of some U.S. economic dependency, as we see that most of the companies, most of the countries that are buying into gold now are, for example, like Bart says, China, for example. We also see Turkey. And it seems that they are trying to get rid of some treasury bonds, some U.S. government bonds, and in return, try to increase their reserves in gold and decreasing their reserves in U.S. dollars, for example. So that's something really interesting that's going on at the moment too.
So very interesting to hear that the central banks, you just mentioned China, Russia, Turkey, basically, and some Eastern European central banks are really seriously buying up gold. So my question to you, Bart, is this price of $1,420 sustainable for the short term?
Wow. It's always hard to say, right? You never know what tricks there is up the sleeves of, for example, central bankers. If they start hoarding gold and then start dumping it again, then that could have some major price action downward. So it's always hard to say what is sustainable or what's the next level we're going to. I do think that in the long term, gold has proven itself as a reliable and good investment. in the sense that it will maintain purchasing power. And what short-term action is a reaction of the markets to, for example, new forms of QE. So I'm always hesitant to say, is this sustainable? Will there be a pullback? Is this new resistance, or could it just drop out? Could the bottom drop out of gold again? But I do know, because it is as a student of history, you can see that gold has always performed very good in economic downturns as a hedge against both inflation and economic hardship. So I'm not sure. I'm not going to predict anything because prediction will always are always wrong.
I understand your point of view, Bart. I got a question for Nick. Do you see basically the volatility of gold gone up in the recent months?
Yeah, I think so. Well, especially coming from, I think it was $1,280 per ounce up to, it went really quick. So we were around at $1,250, $1,280 an ounce for a while now. And then when it reached through the $1,300 level, and then it went further and further. We were actually not really expecting, well, it was somewhat more expecting that it would come back to that maybe 1,350, somewhere like that. But yeah, as we know now, is that it stays on that 1,400 level. So yeah, for us, this kind of, I think it kind of means that it's gonna stay there, maybe for some time, because otherwise it would have dropped below that point already. But yeah, as Bart already said, it's hard to make your projections, but I think it's really important that it actually stays on that level now. And yeah, we're really curious what's going to happen further.
All right. So Bart, you just mentioned it also. This Wednesday, the Fed is most probably going to lower its interest rates. This is one element, but on the other hand, we have for the couple of months already seen some kind of currency wars, trade wars basically happening, where obviously Trump, US and China basically have been talking to each other what is going on. On long-term predictions, do you think that these kind of, you already mentioned basically that these kind of influences basically the price of gold. Do you think on a longer term that these influences are already priced in, or will they be giving some spikes in the near future?
Well, when it comes to the currency wars that we're seeing, trade wars that we're seeing, I think there is a definite reaction that we've seen in precious metals and to the upside of the metals itself. Although when you look at, for example, the United States and what their national debt is right now, it's approaching, I think, $23 trillion. And then, of course, they have a lot of unfunded liabilities, also in the hundreds of trillions. But the dollar is staying strong. There's no other thing to say about that. When we look back at the record level of $1,900 an ounce back in 2011, at that time the dollar was worth, or €1 was worth $1.43. Now it's about $1.11, $1.12. So what you can actually see is that the dollar is keeping its title as king of cash, king of the fiat currencies. And I'm not sure how this battle will unfold, but even though, for example, China and Russia are converting dollar reserves into gold right now, doesn't seem to have that much effect on the dollar, which is really fascinating. What you can see is that, for example, the euro is when you take when you convert euros into gold, then euro is nearing its record peak, and it's always fascinating to see, because we measure gold in dollars, and now it's 1420. Its record was 1900. But when you measure it in euros, for example, or 72 other currencies, gold is approaching or has broken its all-time high. So this whole currency exchange and where the dollar stands in contrast to other currencies, I think that is a definite indicator that something is wrong, not only with the dollar, but also with all those other currencies, even more with all those other currencies, because, well, we're about 8% from the all-time high in euros. And when you take, for example, Canadian or Australian dollar, we've surpassed all-time highs. So yeah, I forgot the second part of the question, but I hope this is a answer to the first part.
Sure, no, definitely. Before I let you guys go, I just wanted to know, within the precious metals, we have gold, silver, and at some extent also platinum. Is there between these three a correlation to be seen, or how are these prices been in the last 1 month to 6 weeks?
Yeah, well, I think it's safe to say that we've seen, first of all, we've seen a really strong increase in the price of gold, which tends to stabilize somewhat over the last couple of weeks, maybe last month. But now we've seen, in that exact same time, we've seen a fairly strong increase in the price of silver. So yeah, it seems like these ratios have been moving outside, or have moving out of each other, and now they're coming slightly back to each other because of the strong increase in the price of silver at the moment. So yeah, I think in that sense it's safe to say that they are somewhat correlated, but still it's always hard to tell if these ratios, if they actually mean something. But I think at the moment, yeah, we can say that these ratios are too high, and we expect them to come closer to each other. But yeah, then it's hard to say whether the gold price should drop or maybe the silver price should go up. But at this point, we see that the silver price goes up and gold tends to stabilize. So yeah, in that sense, they run back to each other. So yeah, at this point, I think they're somewhat correlated.
Yeah, and we have noticed a dramatic increase in customers buying silver. So we've seen this ratio of 1 to, let's say, 85. So 1 ounce of gold equals 85 ounces of silver. It's been up to there in the 92, 93 level in the last couple of weeks. So there is a definite, a lot of investors are seeing that this ratio, which is, if you take it back a couple thousand years, 1 in 15, 1 in 20, that this ratio is out of whack. And investors are trying to capitalize on it.
All right. So Bart and Nick, thank you so much for coming on the show to explain basically what's happening in the gold and precious metals market right now. I will definitely catch up with you guys soon again to talk on other developments in the market. Well, thank you so much for coming over. And I wish you guys a wonderful day.
Thank you, Prem.
Thank you very much. Thanks for having us.
Have a great day.
You too. All right. Thank you, guys.
Bye. See you.